right. The end of the music means it's time for Trade Masters. Welcome to Trade Masters. I am Coach Old Money Holmes, or as I like to call myself, the champ. So tonight I have another opponent, Coach Mark. I'm sure a few of you know Coach Mark here. We're gonna have a lot of fun tonight. As always, we got some great picks tonight. I got a worthy opponent in Mr. Justice here. I think we're gonna have a lot of cool things to see here tonight. So without further ado, how you doing, Coach Mark?
Listen, Greg, I am not going to talk smack like young Tyler did. I have hosted this event and seen you bring dozens and dozens and dozens of good picks over the last couple of years. So, if I lose tonight, I lose to a worthy opponent. And if I win, I will be very happy, but just happy to, I love midweek picks. I love midweek picks. I love the thought of it and all that. I think this is a program that can add a lot of value to a trader's routine. So, happy to be here. I mean, I'm not wearing a beanie tonight. That's how respectful I am to you, Greg.
You're churching it up for us, are you?
I am. Awesome. This is as churchy as I get,
Nice. Yeah, so I actually took a bit of a straw poll with the folks that watched this Trade Masters last week, and they seem to like the new format. I love the new format. It's kind of mano a mano. We're gonna bring our best picks. We're gonna let the audience decide. So there's no bias here, no nothing. It's just gonna be what the folks like, and I think that's fantastic. I love the new format. I think it's great for that manner. And of course, we got jokes. So how can you go wrong with jokes, right? So some good, some bad. As I found out last week, I think I probably only hit on 1 out of 4 or 1 out of 3, but that's okay. It's all good stuff. So all right, well, we're going to start with the Delta round, and I'm going to let you go first, sir. So you give us your best Delta pick, and let's see how she goes.
All right. One of the mistakes or the early things I think a lot of new traders miss when going Delta, because we all like price appreciation. Even a cash flow trader like me, we like price appreciation, is that Delta traders only look at the top of the chart, is that they want that momentum, and as such, if they don't have that momentum with them, I think they're missing out on what can be really cheap risk that can still provide you price appreciation opportunities. Over the years, we see this all the time on charts. And my Delta pick is going to be Verizon here. But, I remember on the Queen's Court many months ago that, when we had this support zone on AMD, that once momentum gets going, great, right? We can make a lot of money with momentum. But also what support levels represent is they represent an area where support has been formed, where we know this is a place where traders are potentially looking to accumulate, and it can represent really, really cheap risk. And one of the things I've learned over the years in my own trading and watching other really good traders is that 50% of it, or 40% or 30%, but not more, is the company and the pattern you pick. But the other huge part of it is the trade management and making sure that you have a reward that far outweighs the risk. Because if I have a reward that far outweighs the risk, then I put myself in a position I don't even have to bat 50% on trades. And I can make a lot of money, not even being 50%. I can fail more than I win. And if I'm putting the reward risk in my favor, then I'm putting myself in a good position. So I love playing off of support. I love buying off support. And I really love buying off support when two things occur. When you have a support level that has been tested multiple times over a long period of time, kind of like that AMD chart. We had tested support, It became apparent to traders everywhere that, hey, this is a place where traders look to accumulate. And I love it when I have some kind of secondary, being the moving average aficionado that I am, where I have some kind of major moving average that is acting as what I call a double band, where you have one support level and you got a major moving average. And if they both line up, it got to get through that with a lot of algos. Now, Verizon matches all of these. I have a 300 weekly in which is coming into a known horizontal support level. Now, what I like about Verizon as opposed to other, because there's other companies that are sitting at support, which I like, is that when you look at the price action lately, we got really crappy market conditions. At best, you could describe them as uncertain market conditions. Broad market is sitting at a support level of its own. There's a lot of FUD in the air, fear, uncertainty, and doubt. That dip that traders bought last week, you buy the dip and it always works out. It's worked out every time in 2021. Well, for the first time in 2021, that dip that started to look good immediately came down. Needless to say, traders are a little bit apprehensive right now. They're a little bit apprehensive. Doesn't mean that the world's going to end, but they're a little bit apprehensive. And one of the things we've seen in the price action, and we saw that pronounced today, is that when things get uncertain, when traders don't know where to go, they oftentimes try to gravitate to a lot of defensive plays. And so you saw stocks like Verizon, you saw stocks in consumer staples, you saw stocks in utilities, you saw stocks in healthcare, some of the defensive plays get a bid. Now, what I also like about Verizon is that not only does it have this major support level that is formed, when you hone in on the chart, you have a pretty concrete. Been a lot of crap going on in the market the last 2 weeks, right? A lot of ups and downs. You know what hasn't broken? 1, 2, 3, 4, 5 separate times, $54 on Verizon. You've come down to the penny almost. That is as clean of a 2-week support level that you can find in trading, where you have so many tests in such a short time, where it's just like, it's almost like algos come in and buy right there, right? Like to the penny. It's not a coincidence that is happening. So you have a stock that is at a major support level, coupled with a major moving average acting as a secondary support, in a quality company that in times of uncertainty could see some stability. And how many times in the last year, I know you might do this, not have done this, but I certainly have been like, buy Verizon as support and just hold it. And then manage it on the way up and then let go. It's happened numerous times over the last 18 months. I'm not making the same mistake this time. Now, what makes the proverbial cherry on top of the sundae for me on this situation from a directional standpoint is that I think you have a lot of room to run in this consolidation pattern. You got a lot of reward compared to the risk. You don't have to ride or die Verizon on this. You don't have to ride or die. You can create a simple stop if you want. And that stop can be as simple as below $54. I mean, if that support level that has been dinged time and time and time again finally doesn't get dinged, well, it potentially threatens the major support level, and you could give it some latitude. But even if I put a support level, and just put a stop 15, 20 cents below, I'm risking $50. Buy 100 shares. I'm risking $50 betting on not only a short-term support, but a longer-term support level with a lot of room to move up the chart. It gives me some place to move my money into right now where, there's not a lot of place, some cheap risk. And then if things get going, you can start selling calls if you want, write it out, manage it from there. Love the cheap risk, love the pattern. My directional delta pick is a playoff support on Verizon.
Very cool, Mark. Very cool. Verizon is one of my darlings as well. I've been in this space for a long time. Love the analysis. Fantastic. I think probably the best point you made is the fact that when things are uncertain, people are going to go to the places they feel are best supported. And clearly this has levels of support. So absolutely love it. I have a little different take, but a very similar concept, I guess. So I'll throw my pick in here, and then just for the audience, anybody that's new, we're going to throw a poll up after I throw in.
But you know where they also gravitate, Greg?
Where's that?
In times of uncertainty?
Where's that?
Dad jokes.
Dad jokes, yeah. Well, we'll be giving them an earful of those in a second too. So, anyway, so once I give my pick, then we're gonna do a poll for all you folks, and you guys go in, pick whose pick you like the best. We'll do our jokes at that point in time, and then we'll see who the winner of each round is. So, for me, I looked for stability as well, but I looked for a little more oomph in my directional play, and I'm gonna show you guys what I was looking at today. IBM. So one of the most boring stocks probably on the planet. They, Big Blue, I think is one of the nicknames I've heard of this. Pretty boring, this particular stock. Really not a lot. If you look at, if you held it for the last, 3 years, you're basically within $10 of the price tag that it was 3 years ago. So not really a lot of jump on this. But the technical setup of this thing right now and what it's been showing us, even in a market that's uncertain, you'll see that I've drawn some lines here. This is a falling trend line. So IBM's been getting beat down ever since basically June, early June, all the way down to here. Started to muster up, found some support, started working its way higher, broke the falling trend line, broke a couple moving average, and just now sitting right on that 50 MA. So this to me is a classic reversal pattern. And what I like about this is same thing Mark said. Mark chose Verizon, I chose IBM. I can't fathom in my lifetime that IBM's going out of business. It could happen. I can't see it happening. So you've got some stability there. You've got a place where people would feel a little bit more comfortable maybe in an IBM than in, I don't know, a cryptocurrency or a high flying, what do you call those underbelly stocks there? SPACs or something, the underbelly, they're going to feel a little bit more comfortable in that. So I like the reversal pattern on IBM here. Yeah, you've got some earnings coming up. I'm less concerned about that. Earnings for this, it does actually have a component to it where it kind of jumps a little bit. I'm really not concerned about that because my target here is getting in at say 140, and the target I'm looking for is at 145. It's 2 ATRs away essentially. It could be there long before it gets here. I just think this is a really, really nice reversal setup on a stock that's been showing some life. It's been running up, 1, 2, 3, say last 5 sessions right into this 50 MA, walked through the 9 and the 20 like it was butter. So I really like how this sets up. If you look at the 1 year, it's still bullish overall for the year, even with this longer term pullback. So the trade on this one, very simple, bull call spread. I'm going out to the November here. I want to buy at the 140, so I'm buying at the money. I'm going to go out and kind of reduce my risk by selling the 150 here. Let me make sure I just got numbers right here, so I don't. 140 to 150 here. It's going to cost you 3 1/4 debit. Now this has got a caveat to it as well. If we look at this trade here, only need one of them. So here we're risking 325 to make 675. So you've actually got a 2-to-1 risk reward ratio there. That was also the thing you talked about, Mark. If you've got the proper risk reward ratio, you don't have to be right all the time. This one, I even want to church it up even a little bit more. I like the fact that if this thing fails, we've got a level of support here at say 136. You've got another level of support here at 132. If this thing got below 132, I would close the entire trade out. If we look at 132 here, we're risking about 160 bucks, maybe a little more, 100. Let's say even if you're risking $200 once the time moves by here, risking 200 to make 675 is 3 point something to 1. You only got to be right on this trade about 30% of the time, 30, not even 30% of the time to break even. So I really like the risk reward in this trade. I love the technical setup, and I like the fact that it's got stability in a market that is uncertain. It's kind of, like I said, taking its beat down. I just really like where this is headed. That's my Delta pick for this round.
No, and I always like when you have a trend line break, it's a significant technical signal. And there's all kinds of ways you can play a trend line break, right? You can go neutral, cash flow, directional, long-term position. It's usually a very quality signal. And I like the relative strength in IBM versus tech as a whole today. I think safe. I mean, once again, this is not the market to put all the chips on red. This is a careful market to navigate. There will be a time where we can have fun and just be irresponsible with margin and all that again. If you want to play in this market, it's just being cautious, and you're not going to get some of the more exciting plays. Oh my gosh, multi-bagger. But make money when the market's difficult. When the market turns easy, we can pound the buy. We can smash the buy button again.
Smash the buy button, exactly. All right, so my friend Tanya is throwing up the poll there. Get in there and vote. If you liked Verizon, smash the Mark button. If you liked IBM, smash the Holmesy button. Whatever you need to do there. So, all right, Mark, what do you got for a dad joke, my friend?
Well, all three of these jokes I have tonight are I had to get kid approval, so I gave a bunch to my kids. So these were my kids' ones that they actually laughed at. What does a baby computer call his father?
What does a baby computer call his father? I have no idea.
Data.
Data. Nice. Well, mine unfortunately is not as well, I guess it's kind of kid friendly. My wife accused me of being immature. I told her to get out of my fort.
Being immature. Okay.
All right, so we'll wait for the poll results there. Next round up will be our theta picks. Do you want to get started on that, or wait?
No, let's do it. Listen, because whoever wins or loses, that's just the fun of it. What we really want is we want good picks. So let me share my screen real quick.
Right.
I really, when I knew I was going to be on Trade Masters this week, and I was really hoping I got a directional setup on Uber, because I think Uber. There are moments in a stock's history that when you look back upon them, you're like, of course, that was the moment I should have bought. And I'm not talking from a technical standpoint. I'm talking from something happens, a moment in time, an event, a new product, where then you look back and you say, of course. I mean, how many people at the start of the pandemic, when you look back, you're like, oh, pandemic, Zoom. Of course, I should have bought Zoom at $100, right? Of course. I mean, there are just times in a stock's life. And I'll never forget what it was with Tesla. Tesla, you follow Tesla for years, the ups and downs, and there was a constant theme on Tesla: is this company ever going to make money? And once they started making money, when you look at those charts, well, and when that uncertainty whether Tesla could even make it was eradicated, well, we have seen quite the multi-bag situation. And you look back on Tesla in the history of Tesla, I don't think it was ever, from a stock history standpoint, it will never be, well, they made this car or this. Elon Musk has been a constant. It won't be a tweet. It was the moment where Tesla started making money. And that fear, uncertainty, and doubt of, could Tesla make it? Can this ever be a profitable company? Was eradicated. And well, we've seen the results. I think we had a similar situation happen on Uber last week, where the CEO comes out and raises guidance. Hey, listen, Sherwin-Williams, Micron, FedEx, all you companies lowering guidance. Uber came out and raised guidance. But not only did they raise guidance, they raised their profitability measures to a place where profitability is now on the table. I heard the same thing about Uber for the last several years. Is this company, I remember reading analysts, and these were smart people, talk about this company cannot make money. There is something wrong with the business model. There is something in this business model that just may make Uber a company that is never profitable. That's changing. And that huge fear and uncertainty and doubt of a unprofitable company turning profitable. I think we had a moment on Uber last week. Uber Eats has been a smashing success. I'm surprised. I was a little bit of a doubter because I kind of fell into that. Is this company ever going to be profitable, Cam? I think Uber is being so exceptionally well run. And I think the success of Uber Eats is just the tipping point of a management team that obviously has a good grasp on pushing ahead, but also becoming profitable. Yeah, I think we had a moment on Uber last week. Investors initially reacted to it extremely, extremely strong as well. I think this is a stock that you want on your radar. Now, for specific plays right now, we're in really crappy, volatile conditions on the broad market. If we break support, it's a ways to go till we have the next support level. So we want to be cautious as general. We don't want to just smash the buy button. And if someone went out right now and bought Uber, I wouldn't criticize them. But I'm trying to be as careful as I can as market conditions play out. Try to navigate a very, very tricky market. But I want some Uber. Now, upon the announcement, even before the announcement, you had started to see a nice little, in the midst of the market, the broad market's sliding, because when we go back and look at the broad market, before 2 weeks ago, it's not like the broad market was ripping and roaring. It had already started to sell off. But as it was selling off, Uber wasn't. Uber was forming and holding support despite the broad market starting to slide a little bit, showing some relative strength. Now, nothing terribly exciting in the grand scheme of things, but that support level was formed. CEO comes out, CNBC, raises guidance, points to profitability, talks about Uber Eats, really genuine excitement. Now, what's the market doing? It's dragging stuff down again. It's really hard to swim upstream. I really like taking a stab at Uber for stock ownership above that support level. If we look at those 41 naked puts out in October, we're getting about 41 bucks. Not a bad return independently. If I'm looking for naked put or cash flow trades right now, they gotta be on stuff that I want to own long term. I absolutely 100% want to own long term. My biggest problem with this trade is that I don't get put the shares. That's when I know I like a naked put, where I'm like, I don't want to just make 40 bucks, right? I don't want to just make 40 bucks, but I also want to be careful right now. If I go out to November, those same levels, $42.50, $40, getting pretty sizable credits pushing out. Somebody might say, well, what about earnings? The CEO just told us he was raising guidance the next quarter. So the biggest pitfall people have for this coming earnings season, and it's going to bite a lot of people, go look at Nike, go look at FedEx, look at Micron. Those earning announcements, they're not all going to be rosy and sunshine this quarter. A lot of uncertainty, a lot of margin compression, a lot of inflation costs that companies have not yet been able to push up, labor issues, got a lot of issues in a lot of industries. We already know in advance what Uber is guiding towards. It's a big, big obstacle in that initial position, getting that earnings surprise out of the way early. I think you're getting good credits here. So how I would do this is naked put above support level. If you want to go 41, you want to go 42. You want to go October, you want to go November. You want to get me to criticize any of those. Good premiums on a great catalyst company. Owning Uber at $41 or $42 would be magnificent. I'm in this trade. I also am going to look for a setup sometime on Uber in the coming future. When I get a good setup, just going to go long. So cash flow for now in these rocky market conditions with an eye on the future on Uber. I think it's that moment in time that we look back on.
Very cool. Very cool. Right up. Just FYI, you crushed me, Mark. 63% for Verizon, 36% for my IBM.
Well,
nobody likes Big Blue,
Well, it's because they were on their Verizon phone and plan when they voted, and it just
there you go. It just automatically did it. Yeah. No, nice job. I'm not a big fan of Uber just because I'm a dividend guy and they don't pay one of those. But yeah, it's nice to see the CEO come out and change the guidance and give it some life. Honestly, I was one of those guys with Tesla too. I don't even really look at a company until they're making money. That's the only time I get excited about them, because that to me is a measure of good business. And so when things like Tesla and Uber can start to show some profits and show some consistency with those profits, hey man,
It just makes you feel better, right?
It makes, again, for an old school guy like me, I want the pudding. I want the proof is in the pudding. I want to see. Okay, don't give me pie in the sky kind of stuff. Just say, tell me, are you making money or not? I don't want to buy companies that don't make money, because in the long run, that never goes well. You know what I mean? But when you can actually see it, you start to see the earnings. I remember watching Tesla, negative, negative, negative every quarter, right? And then all of a sudden you got that flip. Okay, positive, positive, positive. You got a bunch of quarters in a row where they're actually making money. It started to get much more attractive. And as you saw with the stock price there, just to the moon, Alice, to the moon. So yeah, that's awesome, man. Nice job.
If I could get paid a good premium to play a stock that I want to own anyways,
yeah,
that's just bonus.
Yeah, hard to beat. Hard to beat. All right, well, my turn. For my cash flow, I'm going to. Well, first of all, we can talk about the Dow here. So the Dow, it was one of the rougher, rocky stocks here when things started to fall. It really took it hard. It's kind of making some leeway here, making a little bit of a rebound, which is fine. One of the big components in the Dow is Caterpillar here. I like this for a reason. You can see that this thing at a major support level, right around the 203, 200 mark there. Just got blasted down through. No earnings announcements, nothing. Big gap down. It's now come up and it's filled that gap. So this is strictly a technical play here, but filled this gap and then failed. It tried a couple of times unsuccessfully to close above the 20. And then today, boom, it failed and it closed below that 9. This is your classic, textbook bear retracement, if I ever saw one. Fell down, right back up to a resistance level there, and then failed. What I like about this stock is I believe that it's got another chance, especially with the mixed markets that we're seeing. I could see this getting down to 189, 190 pretty easily, and that's really not a big stretch for this. However, I think the smarter play here, the even better play here, is instead of going directionally with this, which is a kind of a short throw for Caterpillar here, I actually like a bear call spread on this thing. I see this really, like I said, this ultra important support zone here that held up several times here, several times there, and several times there before it ultimately failed. I believe wholeheartedly that is going to, not only is this moving average causing some resistance, but even if it gets beyond that, I think you're going to run into some resistance there. So with this trade here, I'm looking for a high flyer here on Caterpillar. So the issue with Caterpillar is we do have earnings coming. It's not till the 28th of October. So what I looked at here was a little shorter term than I normally go. The 22nd of October, so 23 days from now. Got real aggressive on the bear call here. The reason I did it, as I said, we've got some resistance at the moving average. We've got some resistance right there. So what I'm looking at is the 205, shorting the 205 and buying the 210. So I'm risking $5 here for a $1.19 credit. Now you might not get the full $1.19. Maybe you only get, it's a wide bid-ask spread here. Maybe you only get a $1.15. That's still incredible. This as a ROI is about 24% for 23 days, which is pretty. It's aggressive. I'll give you that. It's aggressive. I looked at the 210. The 210 was nicer, but the credit just wasn't there. So I chose to go with the 205, which, like I said, has a couple of layers of protection here. One that I think is very important, and that's the support level turned into a resistance level there. You've got a short throw time here. And like I said, you're staring down the barrel of 24% return on, if you get a $1.19, it's 23.8% ROI on a $5 risk. So just an easy peasy bear call spread here. If you want to talk weakness in this particular equity, it's been getting trounced since June, right? It showed a little signs of life in August and then got trounced again. And this year, like I said, classic bear retracement. I don't think it gets any better than this, to be honest with you. Fully expect some follow through here to the downside. You could even, if you chose, there's lots of ways to manage these types of trades. For me, I think the easiest way is if it gets a little crazy, pick yourself a spot. For me, if it got above, say this stuff here, say in this neighborhood here, got above all that, say 207, 208. You look at the 208 here, you close it out, you're risking $130, right? $130 to make 119. Your reward. You're looking at when I looked at this trade, what was the delta on this thing? So our deltas were 31 and 20. So a bit more aggressive, but the return on it is fantastic, and the chart for me just sets up fantastically. And we're going to be done with earnings, done with the trade long before earnings come. So a bit of aggressive trade on CAT here. I just really like the setup, the technical setup here. I just don't think you can beat a 24% ROI.
Caterpillar, the worst, in my early trading days, Greg, on Caterpillar, I had to learn. You learn so many lessons when you're starting learning, and you do so many dumb things, right? I tried to figure, because I was so convinced. This was like 2011 or something. There was the Greek crisis. There's all kinds of crap going on in the world. It's like, how's this market going up, right? I tried to short Caterpillar with my whole account as it was rocketing up intraday a moment, trying to pick the top on an intraday chart during that day. I got killed day trading CAT that day, but I learned some really good lessons, about going against trend, waiting, not trying to be the smartest guy in the room and be like, 3 days later, it tanked beyond belief. I was right, but that gave me no solace because I lost all my money because I was inexperienced. So CAT has got me. It was, but we learn, right? We learn.
It's a bugaboo for you, is it? So I don't blame you. I got those stock stories as well. Like I said, for me,
it seems like we always have a couple ticker symbols that haunt us. Everyone has different ones, right?
Yeah, and you avoid them like the plague. You know what I mean? So
I know Coach Frank with Boeing. He's
exactly.
Like, I don't want, no, doesn't matter. Anything. Bullish, bearish, I don't care.
I know. I bring it up every week in the scouting report meetings, and he vetoes it. So if it's not him, it's Matt. So anyway, boy. It's all good. All right, folks, get in there. We got a poll going. If you like Mark's setup, fantastic way that he breaks down those trades for the Uber. I like the short in CAT here. Where we've been seeing a little bit of weakness in the markets. I love the technical setup here. So get in there and vote on that. And let's go with joke number 2 there, Mr. Mark.
Did you know that milk is the fastest liquid on Earth?
Milk is the fastest liquid on Earth.
Did you know that?
I did not know that.
It's past your eyes before you can even see it.
Kid approved. Here we go. PG rated. Very nice. Very nice. All right. Well, what am I going to do to top that? I'm gonna save my thinking joke for the
one
end.
Of my 2 children knew what pasteurized was. The other one was like, you're gonna have to explain that to
me. That's good. All right. Let's go this way. So to the guy who stole my antidepressants, I hope you're happy now.
I'll definitely give you the joke this round. Mine's cute. Yours is funny.
All right, 2 picks in the books. We'll wait for the poll results, and we'll. So this is the wild card, Mr. Mark. Whatever you like, cash flow, directional, crazy, insane, whatever you like. It's a free for all now.
I got one more joke for you. How do you organize a space party?
You plan it.
You plan it. There you go.
Hey, I actually thought that one through. I was like, plan it. Yeah.
All right. Listen, in these market conditions, round 3 wild card, I'm bringing a 3-pack of cinema pleasure, and none of them involved AMC, that over bloated stock, coming to a $4 price target near you one day. I love the reopening play. Delta variant case, and I've been waiting for this situation to occur for months. Delta variant spikes, and then it takes so many things down with it. It takes oil down with it, takes cruise lines, take hotels, all kinds of stuff, all of that good stuff. Delta variant cases have been rapidly declining. And did you know, Greg, the Mu variant, because there's always a new variant of of that, and there was that, hey, the Mu variant, got to watch out. It now accounts for almost 0% of new cases. This is what we know about viruses. And ask me, because I stayed at a Holiday Inn last night, so I'm a virus expert, like everybody else over the last 18 months. Yeah. But one of the things we know about viruses is that as they go, they generally dissipate in their strength. The next version is a little less lethal, a little less, maybe more contagious, but less lethal, and so on and so on and so on. So the Mu variant, which was the follow-up sequel, I guess Mu variant was as bad as Matrix 2 compared to the original Matrix, right? It just didn't have any staying power at all. So I like the reopening play, so I think, like, if you went anywhere, if you went hotels, if you went cruise lines, especially from a cash flow basis, you'd be good. I love my movie theaters, and it is ride or die. Unless this is the first time you've heard me talk at Tackle Trading, you know that I love the movie theater thesis. Not only does it benefit from the general reopening, people going back to it, but it's had two additional catalysts that cruise lines and hotels and other areas and airlines, other areas in the reopening space have not had. One is actually produced record results compared to other time periods. Very limited amount of movies, but the movie that Disney put out over Labor Day, literally, not hyperbole, not exaggerated, literally set a Labor Day record. People are so yearning to get back to real life, eat out, to cruise, to stay in a hotel, to travel, to interact, to go to the movies, all of it. It's part of the human condition. I'm a freaking introvert, for crying out loud. And I yearn for more and more human interaction just because of the amount we've been deprived. There is a real opportunity for reopening plays in general. And so, but you have a lot to choose from. So I want some extra juice. I have an industry that has already started to produce results that exceeded on some levels pre-pandemic. I have an industry who has a plethora of big titles, that because we haven't had a lot of big titles in the last year. We got over the next several months and years, we got title after title after title after title that are going to produce amazing results. Most importantly, in the wall of worry, though, there's been this fear that nobody's going to go to the movie theaters and everyone's going to stream. When companies saw Disney, the producers of movies, when they saw the results over Labor Day, you had Disney announce for the rest of the year, their movies aren't going directly to Disney Plus. They're going directly to the box office, because there is a duality in movie theaters and the companies that produce the movies. There is a duality that helps the entire ecosystem of movies play out. Disney recognized this, Sony recognizes this. Disney committing to the rest of the theatrical year straight to the theater. That is a huge block off the wall of worry. And we got several ways that we can play the movie theaters. We can play Cinemark, which is my personal favorite, because I think their management team is absolutely A+ stellar. They came into, you would like Cinemark, old dividend payer that had to suspend it because of the pandemic, Greg. But just an A+ management team, fiscal responsibility, just really well run. We're financially stable coming into the pandemic. You have independent movie theater, like.
Let's be honest, Mark. You like Cinemark because it's got your name in the title.
I did not even know that, but maybe the subconscious narcissist in me knew that, right? Yeah. You got producers like Lionsgate's Thin, not a movie theater per se, but producing movies. You got IMAX, and IMAX is where I'm going to settle. And I'm going to settle on a cash flow play on IMAX, because once again, market conditions are crappy right now. And you can go directional if you want. I think there's price appreciation potential. I think there's plenty of it. But I also am dealing with market conditions that are tenuous, to say the least. And so when I have a broad market sitting on support with all of the stuff going on outside there in the world, listen, I like price appreciation. I'm a cash flow first trader, but I like price appreciation. But when I got plenty of reasons to maybe be a little more concerned, I'm going to err on the side of caution. Now, when you look at these charts, right? I also like relative strength. When you look at these charts over the last few weeks, and just looking at them, looking at weekly candlesticks right now, you wouldn't know the broad market selling off. What did you? You wouldn't know the market. You would think the market's having a good old party time. It's because I'm not alone in this. These things got so oversold because of Delta, so oversold because of the streaming worries. And then you get the Labor Day box office totals. You get Disney and other studios saying, yep, all right, we're going to send them direct to theaters. It has created this, yeah, of course, right? And you've seen that play out even with broad markets, small caps, everything's struggling right now. When you go over this group of stocks, you are not seeing a group of stocks that is struggling, are you? You're seeing some price appreciation. I definitely think there's price appreciation potential, but with the broad market and the uncertainty of the broad market, I want to play it a little bit safe. Now, one of the things that I benefit from in playing it safe is that I get pretty good premiums. So I'm looking to go out and give you two choices. I like the 17 naked put on IMAX for November, 51 days out. 51 days is that time period where theta starts to bleed, starts to accelerate. You're starting to get into that theta curve where that time value starts to tick off at an elevated pace. I also want to get in above, and I like some good old fashioned weekly moving averages. You know, my favorite, the 9. I want to get that as a potential support level. And if, cherry on top, I got an old breakout level that lines up with 17 and that 9, creating a nice backdrop of support in an area that is hot, that is trending against the market upstream, that has numerous catalysts from declining Delta cases to Disney going direct to box office totals. Hot area of the market, definitely can see price appreciation. And if it wasn't for the crappy market conditions, I wouldn't be so conservative. We're going to be conservative, throw out a really good premium on IMAX at $17 naked put for November. So movie theaters, specifically IMAX, my wild card trifecta pick.
Very cool, Mark. Very cool.
And I saw listen, you edged me out in the last round. So
yes, just
and listen,
barely,
if I'm going to lose, I'm going to go down with the strongest area in the market that I believe in right now, and that is cash flow on movie theaters right now.
Hey, you're gonna go down swinging. That's what I love about you, buddy. So, yeah, no, I like the pick. Movie theaters is not, again, it's just the type of trader I am. It's not on my radar typically. I do like the case that you made for it. I think it's hard to beat. You know, it seems that things are moving along, right?
And so basically, are you telling me Caterpillar lost me the last round again? I can't beat that stock. It does not matter what I do.
Hey,
like
I did a little bit of research. I had to find your kryptonite, brother.
Like that stock owns me. Like, period. If I brought up the same pick, I'd have lost the round still. It wouldn't have mattered on Caterpillar. So
yeah. Anyway, great pick on IMAX. I think that's fantastic. Naked put at 17. Now, question for you, Mark. Do you want to own IMAX? Is that your plan? Like, if
I want exposure to movie theaters in general, and I don't like putting all my eggs in one basket. I own Cinemark. I have naked puts on Cinemark. I own shares of Cinemark. I own Lionsgate. You know, and so but listen, don't do them all unless they represent the standard risk, because there's no diversification. There's relative diversification, but these things are going to generally swim and sink together. So, and find your favorite one.
Those 3 charts you had, they were all swimming together. So one maybe a little more aggressively than the other two, but
exactly right.
But they were all moving in the right direction. So very good. All right. Well, I'm going to swing my own wild card here. I want to kind of break down the markets a little bit here. I don't know how I got that up there. Just give me 1 second. Get rid of that. Get rid of that. And move that. Sorry, just moving icons around. So I want to make a note about the markets here. So first off, if we look at the S&P 500 here, I want to make a couple of notes here. I'm going to get rid of all these lines. So obviously, we had a pretty aggressive beat down. It got pushed all the way down. Okay, found a little bit of life there. Turned around, got beat down again, as Mark talked about. The one thing I want to make note of, though, is this is our pivot point here, and this is now our pivot point here. It takes 3 candles to be a pivot. This is slightly higher, and I
Greg,
do.
are you showing a chart? I'm not seeing it on my screen.
Oh, I'm sorry. Maybe did I mess it up?
You might have pushed the wrong button, my friend.
All right. Sorry. Can you guys see the S&P 500?
Now we can. Yep.
Awesome.
Now we can.
So the point I was making was, so basically the futures got beat down here. The S&P 500. It made a turn here, made a pivot, tried to get some signs of life, failed again. It's now made another pivot just with today's candle. It's now moved up. If this is a pivot and it holds, it is slightly higher than this pivot. Okay, and when I say slightly, I mean very slightly. So what this appears to be is just a very short-term, very short-term bullish uptrend when you've got a higher low and a higher high. Okay, now again, it's very short-term. I'll be the first to tell you that. The reason I'm telling you about this is for the next reason. Let's look at the NASDAQ. And what's the difference between the NASDAQ and the S&P 500? I get rid of these drawings again. Here's the reasoning, okay? Pivot here, okay? If this is a pivot, which it appears that it's trying to form one, look at where this pivot is. This is a lower low pivot, and this is a lower high pivot. This tells us, fundamentally speaking, or sentimentally speaking, that the NASDAQ is in worse shape from a bullish perspective than the S&P 500. That's how I'm reading it. It looks the same on the ETFs of these indexes as well. But the point being is, for me, when I start to qualify or get a bias for a market, these lower lows and lower highs lead me to a conclusion. And the conclusion to me is that right now, and this is only right now because it's the kind of analysis we have to do, tech is a little bit weaker than the S&P 500. That's the whole point of this diatribe. This leads me to my pick, my wild card. There's a little company, I'm sure you've heard of it, Advanced Micro Devices. Okay, Advanced Micro Devices, obviously in the NASDAQ, a big part of the NASDAQ here. Okay, it had a heck of a run here, beautiful run up to 122 and a half. Kind of chopped sideways, but getting beat up. Tried to find some legs. Pulled back aggressively over the last couple of days, much like tech has. So not a big surprise there. But look at the level that it's sitting on. It's sitting right at $100. It tried to fail there and didn't. It's now down to that level again. We're looking at a very significant price level here. Okay, if it gets below this price level, you're talking 95 very quickly is the first target that I think this gets at, and I think 90 would be a logical second target. Okay, so for this one here, it's all about this $100 price level. Clearly, this $100 price level means something. If it failed here and now touched down there again, it clearly means something. And I know Mark and almost all the other coaches I know, we pay attention to round numbers, and this is a very significant one. So
yeah, you just have too many incidences over the years where round numbers mean something, right?
Correct.
I mean, they just create buying and selling.
100%. I always explain this to students. It's like you go to the dollar store and everything's 99 cents, right? It's not $1, it's 99 cents, right? Well, what's the difference? It's a penny, but it's still that psychological price point. And it's the same thing when you trade stocks. So this drop below the $100 mark here, I think if we get this, including the weakness that's already in the NASDAQ, which is what this is in, plus we've got these moving averages here. you'll see that we've got these death crosses. So we've got these moving averages. We got the 50 on top, 20 in the middle, and 9 on the bottom. That is actually a bearish formation. Okay. And so once we have those all lined up, that's even more weight that's pushing down on this stock. That's how I tend to use those moving averages. So a break below this, even below the low of this candle here, 99.51, a break below that, like I said, I think it gets you to 95 very quickly. This is a $3.28 cent stock. So you definitely got at least 1 to 95. I personally think if it gets to 95, it's probably getting to 90, which is another round number. We have a saying, I think it's, I'm not sure if it's Matt, if it gets to 90, it's going to 100. Well, if it breaks 100, it's getting to 90, right? So anyway, very simple. Again, not really trying to reinvent the wheel here. All I'm looking for is a breakdown of the $100 level here. If it does not break this number, then I have no interest in the trade. But if it does, I think there's a real opportunity to profit here. So what I pulled out of the hat here was a November 100, sell the 90, bear put. Sorry, what did I do there? Wrong side. My bad. Put side, sell the 90. So you're looking at about 383. Just get the analyze tab up here. So you're looking at 383 in potential loss and 617 in potential gain. You're almost your 2 to 1 there. You're very close to your 2 to 1 there. You could even play this as a stop loss. If it breaks down, get above here, maybe 105 above a couple of these moving averages. Obviously, they'll float down as well. So even at 105, if you wanted to tap out, you're looking at $100, right? Even after a few days go by, you're looking at risking 100 to make 6, right? So the potential for a really good trade here, even if you want to get a little frisky, give it a little bit more. Go to 110. You're only risking $160 and a potential to make 617 if it gets to the second target. So with this trade here, it's trying to hold on to this level. If it does, great. It goes back up. There's no trade to be had here. But if it fails, which it's not looking real strong right now, neither is the NASDAQ, I really like the fall on this one. And the reality about bear picks as well is when we go bearish, it tends to fall faster than we go bullish. So just keep that in mind as well. You may reach your targets much quicker. This would allow you to close the trade out early and get rid of some risk as well. So bear put on AMD here. The tech sector just looks a little bit weak to me right now, and this looks like a beauty setup. Any thoughts, Mark?
Oh no, I mean it's pretty textbook. It's pretty textbook. AMD is, one of the psychological hurdles some traders have, because AMD has treated tackle trading so well over the years. I know that since AMD was at $9, we have been a big, huge fan of AMD, and I know we create those like bonds with a stock, right? But a good setup is a good setup is a good setup.
That's right.
Whether its name is AMD or Caterpillar, and I just said Caterpillar, so of course I'm going to lose the round, right? Because I just mentioned, what is it? You mentioned it 3 times fast. If I say it one more time, a Caterpillar truck is going to show up in my bathroom mirror.
It's like Candyman.
So that company. But no, good setup's a good setup. But and we got to remember the difference between trading and investing, right? We would never want to short AMD from an investment thesis. That's not what we do in trading. We find good setups that make sense, clean entries, good risk reward, and the ticker is almost irrelevant when it comes to that. Like the broad market analysis that you tagged on top of that, though. Tech is weaker right now, right? No reason to think that that's going to change anytime soon either.
Yeah. All right. So you got any more jokes there, Mark?
I have one more joke.
All right.
This was my daughter's favorite.
Tanya, get the poll up there for you folks. So
yeah, this is my daughter's favorite. How many tickles does it take to make an octopus laugh?
How many tickles?
How many tickles does it take to make an octopus laugh?
I don't know. 8?
That's what she said. The correct answer is tentacles.
Tentacles. Nice. Nicely done. Well done, sir. Well done. Oh, that's funny. All right, I got a couple here for you. I got one that I think's funny, and then I got one strictly for you. I want to see if you get it, Mark.
All right.
The first one is, the first rule of Alzheimer's Club is you don't talk about chess club. So that's the one I thought was funny. Okay, I got one more for you. So you're gonna have to put on your thinking cap for this.
All right.
one. A Roman legionnaire walks into a bar. He holds up 2 fingers and says, 5 beers, please.
Yeah, I the second you said a Roman legionnaire, I started putting the
Roman numerals in
the numerals, and I had them laid out. So
nice. Right on. All right, one more. How do you find Will Smith in the snow?
How do you find Will Smith in the snow?
You look for the fresh prints.
You look for. All right, I got one more since we got. My kids didn't like this one because they don't know who Snoop Dogg is. I need to rectify that situation. Why does Snoop Dogg always carry an umbrella?
Just in case it rains cats and dogs. I don't know.
Faux drizzle.
Faux drizzle. Nice.
I love Snoop Dogg.
Not
necessarily the character that is Snoop Dogg.
Have you seen the Corona? Have you seen the Corona commercials? They're great.
Yeah, like the character, the personality. Yeah. He just seems to be just one of those people that just makes me smile. Like the character, of Snoop Dogg. So,
all right, how are we looking in our poll there? We still got we got a couple minutes here. I'm gonna do a couple more jokes if you're all right with that.
I'm out of jokes. Like, listen, I brought what I had to the bar.
I got a couple here. So my friend gave me his EpiPen as he was dying. It seemed very important to him that I have it.
Oh, okay. Can you say that one again?
My friend gave me his EpiPen as he was dying. It seemed very important to him that I have it.
All right. I got it.
All right. One last one while we wait for the poll results. What's green and fuzzy, and if it fell out of a tree, would certainly kill you?
What's green and fuzzy, and if it certainly fell out of a tree? I have no idea.
A pool table. All right, I'm out of jokes. That's all I got.
That's a funny joke because you don't see it coming, right?
No, you don't. You totally don't.
First the absurdity of it makes it funny.
How'd the pool table get up in the tree? All right. All right, how we doing with our poll there, Mr. Tanyan?
What do you think about the broad markets, Greg? You being careful out there?
Yeah, I really am. I talked about this in Lounge today. I'm going to be on Traders Lounge in a half hour as well. Yeah, it seems to me with yesterday's really big red candle there, I could see today just being a dead cat bounce and still showing us some trouble. So I am very cautious at this point. I've got a nice mixture, some bulls left over, but I got some bears in the mix as well. Just reduce that overall bullish delta a little bit, just to play it safe. So,
Greg, congratulations! You remain champ as trade master.
Oh,
AMD 54%
again.
IMAX 45%.
See, you said Caterpillar. If you hadn't said Caterpillar, you'd have won.
That's my job
for sure.
Listen, I brought my best. You're the champ. You get the last word.
I just want to say thanks, Mark. This show is so much fun to me. I want to thank everybody out in YouTube land there as well. This to me is just a ton of fun. I get to hang out with folks like Mark and we get to get your feedback. I think I really like this new format for that reason. We get to see, okay, what do you guys really like? How did we do here? I really like that. And it's all positive feedback anyway, right? Some people like some things, others like other things, but the reality is we all have a good time here. And really, I think it's the best way, because for me, trading can get awfully lonely. You know what I mean? Like when you're day trading, I'm not talking to anybody. I'm not, I'm not interacting. I'm just focused on my day trading. So it's nice to come out and do these kinds of things and interact with the folks in our community. And we just have a stellar community, bunch of awesome people in there, and we're always welcoming more. So if you know anybody who wants to join a great trading community, Tackle Trading's the one. But yeah, I just love this, and I appreciate your time, Mark, and thank you, Tanya, for helping us out, and thank everybody out there for watching. We enjoy doing this for you guys. So.
No, and if you're new to tackle trading or aren't a pro member, give us a shot. We got a great community. We've got great coaches, do a lot of content. Go to the store tab at tackletrading.com. Sign up for a free trial. But Greg, like you mentioned, 8:30 Eastern tonight, 30 minutes, 27 minutes now, you'll be hosting a trading lounge where you can gloat. You were very gracious there. In 27 minutes, you can be like, I smashed him,
Well, I gotta eat some humble pie here. You smoked me 63-36 on that first pick, and I just barely edged you on the last two. So I don't know how much gloating
but here's the
I'll
thing.
be doing, but
it's listen, a win's a win's a win. Congratulations.
I'll take it. All right, thank you, sir. Everybody, have yourself a great night. We appreciate you.